Good morning. This is Fari Hamzi. I'm running a little bit late. I had to do a little errand middle of the night, take care of a friend stranded just about Sarasota, and on Escalade and his wife, and just long to do for when you're running an operation like this, but is a good friend, and here we are. Well, I walked in was 6:05, I remember. I've collapsed, but that's 9:11 after a long shower. So if I'm a little bit offline here, forgive me. Okay, I'll try to be as alert as possible. Notice on Twitter we said, matter of fact, let me see if I can find that quickly. We said at 2:06 p.m. Yesterday, okay, on Sunday. Before I left to watch some games, some NFL has started. If you come here, you'll see, there we go, right there. There we go. Right there. We said that this was 2:06, so earlier down here, I said, all systems will go, expecting a move up in NQ. This is 19 hours ago. It was 2:06, I remember, was a reply. Move up in NQ overnight, do merger Monday, and we're still oversold. And then, and I gave an update there that said 192 up on NQs, 1.7. Now, somebody asked me what's a merger Monday. I guess you got to go back see what that meant years back. But anyhow, let's go to our econ data here. It's the third week of the month for September. So it's expiration day. That's Friday. We also have Rosh Hashanah that day. Here's what we have on calendar. Nothing. It's a Monday. Usually we don't. This Monday morning we don't. Tomorrow we have Empire State. Manufacturing, import, export. I don't care about that. Let's see. Retail sales. That's what we want to watch. That's Wednesday. And business we're not too crazy about. I'd like to look at housing, even though it's green. But retail sales and housing, I'm going to look at. There's the EEI coming. And then, of course, we have a FOMC. Remember, it's a 2-day FOMC meeting. Starts today, ends, starts tomorrow, ends on Wednesday. As you know, all these meetings are, since Jay Powell has become the chair, they have a press conference. We're going to get 2 p.m. Wednesday opinion. What really starts the fireworks would be the press conference, and it's about 45 minutes. As before, each trade is about each question from the Fed chairman should be treated as a different trade. So it makes it tough. So what you may have to do is take the trade, get out the best you can, wait, maybe miss part of a question, wait for the third trade, like 1, 3, 5, like that. You miss one in between. Why? It just, if the questions are non-aligned, not related, you have a discombobulated market, because depending on what the question is, what the answer the Fed chair gives, you can have a different response. And it's a little bit dicey. By 3:15, 3:20, all is well. We should be okay. And then it becomes more of a he's done. He will leave the press conference, and market goes back to his current market forces battling back and forth. That's for Wednesday at about 2:30 to 3:15. All times are Eastern. Housing starts on Thursday, and jobless claims. As you know, for the first time in 20 weeks, we dropped below 1 million last week. So let's see what we in the works here. They're looking at 850. Good. Again, we have housing starts. That was our permits. This is my husband English. This is crucial. The permits and starts. You see the red color. Okay, and you also have Philly Fed. Nothing else there. And then you have expiration on Friday. It's quad witching. Remember, it's a quarterly, so it's quad witching. You have stock index futures as well. And you have consumer sentiment and LEI. So early morning Friday, fireworks. Okay. Let's go through PMT quickly. Again, we start with indicator econ data, PMT. We go to futures and a little bit of DMZ if needed. Okay. All right. Timer chart. Tremendous pressure on Thursday, and then you got the Friday day, all above 50 more, all heading here. So expectation was we were oversold, double pressure down, it held. Same thing, a little bit over, went over on NASDAQ. That's not something to be scared of. That usually happens because of high beta nature of the stock in that index. It has that reaction. Are we seeing a little bit of a bullish divergence there? Absolutely. You see the lows to lows versus the price to price, so price versus indicator. This is McClellan oscillator that's there. Are we pulling back up very slowly? Of course, we know the results now, but this is, think of as over the weekend. But that's what I was looking at before I made that comment about 2 p.m. yesterday. That if you look at the CIDF, you can see what that's doing. We're getting ready to basically says, listen, if I get a chance, my sentiment will be at least to go up at least one day, maybe two. And that's where we are right now. Okay. SP1 Momo. As you know, I gave a warning. We could not record on Friday. We had a problem recording. This occasionally happens, which basically forces you guys to be here by yourself rather than watching the video later, which is not a bad thing. We talked about the signal here, the sell, the mechanical sell off the daily charts, and that said to us, this could be inverted. That is, you're getting a sell at the max point. That means avoid it. Avoid it. Let's see if it flips or not. You see what's happening today. That's what we talked about on Friday. Those of you here saw that. We go over that. We settled at with SP1 at -1 sigma. So we kind of came back up slightly. If you look at sigma to sigma from SPX to SP1, let me bring you back here. You can see, look where we are now. We're at 1.5 sigma back there at 50 bar. You see what's happening here on SP1. Again, values don't mean anything. These are scrambled by design, not to give you any hint of what this is, but it has to do with a derivative of advanced decline. All right? As you know, this was put together for a hedge fund in New York, not New York, New York, Stamford, Connecticut. Stamford, Connecticut, back in 2008, on the flight back actually from New York. Emergency visit there on different matters, but on the way back, this was put together. Ever since, it's been a great tool, but you have to use it in tandem with Momo. I know a couple of you guys got access to PMT because of signing up with us on NQ, and you were wondering about that. It is covered in our PMT webinars. You just have to take a look at it. Sometimes a little bit more, sometimes a little bit less, depends which webinar you're looking at. But basically what is this trying to do is give us the confirmation between price action and advanced decline, and it's a special case of advanced decline. I won't go beyond that, but right now it's good. And then we have to build a little signal channel over that, not a regular signal channel. Concept is the same, but it's actually built in with this plot point. As you see, it shows no other indicator. It's built in to go with the same scale. The trick is making sure you're on the same scale. We had some, actually that was when we learned a lesson that was a foul in the original design. 4.67 is a Momo. It is younger brethren. It is a faster moving version of it. Excuse me. And again, my apologies if I'm not very alert. But what it does is that it creates a signaling. Just like here's an example. Just like this is CI, okay, and this is a smoothed CI. This is SP1, and that's a smoothed version. Except this is inverted. This is faster. Instead of being smoother, okay, it's a little bit more jerkier. Okay, why? We use that for signaling, especially, for example, look at here. Now, I know one of you guys wrote to me saying, I want all of these. I've signed up for PMT. I've signed up for Happy. This is not recent. This is a while back, probably like February or so. And I need to get Momo. No. We never said that's the package. Show me one iota, one webinar, one website that says if you sign up for PMT, if you sign up for indicators. We're going to give you all our indicators ever used for PMT. No, we're not. Not going to do that. A few crown jewels are going to be kept. That's not going to be going out there. We'll explain it, we'll share it to you, but you're not going to have it on your screen running. Why? This will give away what we've done here. We're not going to do that. But best part is that you can see it. You can see what's going on. Look at that divergence there. This divergence showed price was coming to an end on the downside. Look how we were dropping. This already beginning to pull up. That's the beauty of this. And then you could see the peaks. We have some small peaks there, pullbacks. Is it in a divergence? Yes, it is. But this could go on for a while, just like this other chart. Hold on. Okay, there we go. Just like this. This is not my indicator, but this is what we look at. This is a dollar sign SPX Alpha 200 Romeo from stock charts, which is number of percent of stocks above 200-day moving average. That's there. They calculate it's good for end of a day. As Friday, September 11, the reading was 59.92. But notice how also in the past, let's see, these divergences, okay, show to a possible drop. It will take a while to get to see the drop, but the divergence, especially on the top, is continuous. All along, if you go back, you'll see. We rise in the price. This doesn't. For example, look at this value there. That's like a head and shoulders, and then finally drops down. This occurs on the top. The bottoms are V because of greed. The tops are fear. I'm saying the bottom. Sorry, see, I'm discombobulated. The bottoms are V-shaped because of fear, so they're sharper. The tops are not. Tops takes time to form, and there are a series of back-to-back divergences. So that happens. We made this a little bit faster to get, not slower. We did it smoother than we did here. We made it faster. But this is very slow, by the way. This is not very fast. But we want to make sure that there's a divergence tool built in there. And I think about a week to 2 weeks after SP1 was done, if I remember right, I come to that understanding that I've got to do something for signaling. I mean, the second line that we have, that's always, all indicators have it as a signaling line, but except in this was inverted. I had to make it faster. So it's a smaller, faster brethren. Let's go to SQ. Let's see what SQ did on Friday. SQ says, my mission is done. SQ says, listen, I told you guys we got a problem coming early on. The problem was dropped. It's done. Does it mean SQ is done for good with us? Heck no. Heck no. No. Remember, the 2 months plus signal is in place. That was 7:30. I've pounded the table since then. July, that's coming. Given the seasonality, given the election, hurricane season, bias on for the Jewish high holidays, all that is still intact. So we're just getting a little bit closer to it. But the signal is in place, and this tells me they're reloaded. On a deep, out of the money, SPX, not SPY. Not what you guys trade on a PMT, but big boys trade to create a longer term, out of the money hedge. Put some money up, not a whole lot, but those contracts are expensive. SPX is expensive. So, and it's deep out of the money so that either they can trade it or use it as a pure hedge. Like I would believe it happened somewhere here on SIPs earlier in the year in place. So we're down to 125. Look what the readings were. And also it's -2 sigma. Okay? -2 sigma. This you can plot yourself. Not a big problem. It's a $SKEW.X on TradeStation. Again, it's updated. Not every day because sometimes there's no solution for it. This has to be computed backward. Okay, so there's it's an asymptotic formula. It will not have a solution some days. How do you know? You go to let's see, data window. You see this? Your data window. If you click that, you see sometimes it's jagged because that day there was no solution found. And it keeps the same data until it finds it. Then it does a shortest path linear extrapolation. So that's where it gets a little bit jagged. Okay. For that matter, look at how this Sigma channel is. Look at that versus others, much more smoother Sigma channels because these values are defined every day. Okay. There's only one value. There's no open, high, low, close. Just one reading about an hour after the close. Okay. Moving forward. That's 9:26. I gotta hustle here. Okay. Here's where we are. Gap up last night on ES. Very nice. Remember on Z contract. Solution is that we're still going down. Remember that when it gets back down to, I'm sorry, this has got a delta in there of about 4 handles. So it's like 11.5. Are we near bottom? This is trying to signal that. Yeah, it's pretty exhausted here where it is. Remember, when the value gets when the value this is a little bit inverted, guys. This is hold on, are we on that? Let me make sure. One moment, please. Don't want to say something out of line. Let me make sure what we have here. It's a U and yeah. Here's it's a U versus Z. That's correct. So it's September, but I do believe that should be expired. The contract doesn't show that. Okay, so that might be expiring not tomorrow, but next Monday. So this Friday we're gonna go to V minus F21. You know, the October will become lead. So this is the final close of its trading for the new contract. So we'll go to V and long V short Jan 21 for VX. This shape will turn a little bit. It's a little bit discombobulated to this. So maybe it's my head right now. I'm trying to figure out what that meaning is. Remember, we have a delta here. These values have gotten so big because we're in uncertain times, unusual times. I've been pounding the table saying, guys, whatever you do, keep an eye on VIX contract. I'm saying VIX cash and VX contract. Okay, we had another spike there. So with that said, I'd rather postpone measuring or commenting on this chart until you no longer is lead. What is this? Oh, there we go. No longer lead. Okay, it's a little bit too negative for me. All right. More importantly, and less noisy as a VX futures. Let's look at SP2. Another great indicator, probably our oldest indicator ever. It is not part of a happy indicators. It's not distributed. It uses a different type of advanced decline in a different type of a price cycle. With price cycle, that's combo, but it's been unreal, uncanny on the lows. You could go back and you do the draws, but it kicks down that low. You could see a bottom is coming. It's not precise. It's about a day or so in advance. Yeah. We had a very low reading last the 8th. What was it? Yeah. Last Tuesday, we bounced back the following day, very strong, and then we got hammered. That was outside bar. That killed it. Retest of the Friday, retest of lows of the Thursday on Friday morning, and here's Monday morning. Look where we are. We're heading up. This is very good for cycling from fear to greed and back. Again, the top could be misleading. All tops are. The bottoms are very sharp because of the fear. Good. Let's go to the futures very quickly. Murray, hold on, Murray. I'm not allowed. Sorry, guys. Yeah, I'm not touching anything. No, until a little bit more left. Okay, let me go to MB1. We want to see what has happened overnight. That's crucial. Out of rather than the craziness of OTF. Now, believe me, we're going to have a much better OTF today. There were some volume issues I noticed over the weekend. Right after I worked with Nader, we did some changes over the weekend. There's one item still left, but that was in the morning. And I did we marked in the room, please leave us. We're going to be updating and so forth. But one of the things when I was waiting for that, I looked into some of the data download on the Z contract. We only had one really good day, which was Friday. Early on, we had some issues on NQ in the day. Yeah, those are adequate. Was there adequate amount of blocks there? No. Okay, I'm talking about this time of the day. I'm saying this time of the day. The adequate blocks were not there on that, right? Okay. ES was very liquid. I do believe the signaling. Not today's that issue's gonna go away just because of volume coming in, but this has happened a few times since last 5 years of doing OTF in the last final days of its testing or putting it in the chat room for you guys in a formal way. Here's what we've done overnight. Gap up here again, and nice run up. And then early this morning, I got CNBC on, trying to catch up what was going on, and also stay awake with more coffee. And he lives in off of Wiggins Pass, so just north of us. I had to drop him off with his wife and then come back. My apologies there. Now, let's go to fractals quickly, and then I'll readjust the viewing for you guys, okay? So, MBS is at 11,165. If we stay above this, I think the upside path is the path of least resistance. Watch the consolidated, or what I call the CEP, Center of Probable of the quote probability of prices. You're going to see these two we're going to play with, the large and medium, and keep these levels in mind. As these levels going to change, there was another question over the weekend, why these levels are not fixed? It's because there's order flow. Nothing is fixed. If it was fixed, you could easily game it. These levels change. It is not, let's see, this chart. It is not IB levels. IB levels are by definition fixed. Once the IB, the first hour is finished, these levels go straight line. You see that. And also on dot T. Each of these indicators are for different purpose and designed differently and taking hours and days and weeks to understand it, to write it, to analyze it, and be able to share it with you guys. Very little here is work from others. It's a mixing of some of these technologies. But in some of these cases, like DMZ, nobody had done that before. So we had to, the compounded problem is you have to also interpret it, make the indicator, make the rules, interpret it, and a lot of times, 9 out of 10 is garbage. I'm telling you. Financial engineering is not very good on what they do. And that's all we've had issues like 87 crash and so forth, or long-term capital. It's not enough tested. And every once in a while, these products get put aside. They're done. We're no good. Experiment didn't work. So those who survive, we have to cherish them. But the rule making is crucial, and adherence to the rule is even far more important than that, because you have to be unbiased. You can't defend it because it's my indicator or your indicator. Okay, you got to be objective, saying, this is the rules you came up with. It's not working. Hey, something else is wrong. Go back to drawing board. So that's been my journey. Okay. With that said, let me close this. I'm going to try to post it for you, and then rearrange the charts for you guys to move forward. And then I gotta get some rest, guys, because I